Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate market update. That's the residential real estate market update for El Paso, Texas and southern New Mexico for August 2022. And I'll be right back with your report. Back with the report, and here we go. Here is our report for Resale Homes. What you're seeing here is that the inventory dropped a little bit during the month of August. I actually thought it was going to continue to go up, and we were going to see that spread grow wider on the available homes and the sales, but it didn't happen. So we had a little bit of a drop in inventory. Our red line and our green line got a little bit closer. Now here's the specifics of what happened. Pending contracts are down 19.7% year over year from 529 down to 425. Again, resale homes only. Sales are down 10.3% year over year from 741 last year to 665 this year. Months of inventory down just slightly, 3.1% change year over year. Really insignificant, 1.31 from 1.31 down to 1.27%. Average price is up. This is the big number here, 12.9% increase in the average price from $228,699 last year, and we've gone to $258,124 this year. That changes your numbers on the average size home, so they're going to continue to go down. This is a prediction I made about a year ago. As those prices go up, our average square footage is going to go down, and we went from 1,896 last year to 1,868 square feet this year. It's not a huge difference, but it is a difference nonetheless, and we're going to see more of that when we get over to our new homes report. Price per square foot, 14.5% up year over year, $119.24 a year ago to $136.55 this year. And days on market is up just slightly, 48 compared to 42 last year. Not a huge difference on that. Now, new homes, here's our report. So our line is on the available inventory. That one is continuing to go up as the supply lines continue to get better and better, and the builders are getting back to what they're going to call a normalized market. So we're seeing that spread on available homes, and we're even starting to see some incentives in some of the builders' packages where they're increasing the buyer compensation for agents. They're also increasing the incentives that they're giving over to the buyers and things like that as the inventory continues to grow. Now here's specifics. Pending contracts continue to go down 14.8% year over year from 216 to 184 this year. Sales down 15.8% year over year, 215 to 181. Months of inventory is up 72.4%. Increase year over year, 301 to 519 this year. Now this is where we're starting to see you can probably cut that number in half because there is standing inventory with many of the builders. So that number, even though it says 5.19, it's not 5.19. I'm going to say it's closer to 2 months of inventory that's actually available, and the builders are starting to make some deals because they want to get those homes off of their books and stop paying that interim interest, which does nothing but eat away at their profits. Average price is up 13.6% from 261,557 a year ago to 297,123, and the average size home again down, yes, just slightly, 1.6%, 1935 last year down to 1,903 square feet this year. Price per square foot continues to go up 15.2%. From $134.40 to $154.89. That's a big jump there. And then our days on market is down to 130 compared to 215 last year. And you remember we were still in that COVID last year, and those supply lines just hadn't opened up yet, so they couldn't get those homes finished. That's starting to normalize as we get in here. Now, here's the interesting thing. This is the annual appreciation rate chart that comes from the Federal Housing Finance Agency. That's one of those government agencies that the only time you hear about it is when I present it to you here on our market updates. And what you're going to see over here to the far left of me, your right, is that we've had an 8.9% increase in value in the first 2 months, in Q1 and Q2, we've had an 8.9% increase in values here in the El Paso Metropolitan Statistical Area, the MSA, and that's a big increase. Last year, we had an 18.9% increase year over year, and this year, we're on track to do the same thing. We will see what happens as we continue in Q3 and whether or not Q4 is going to hold up, because at that pace, we're looking at an 18% increase year over year, which would be 2 years at 18 point something increase. And that's why your values are going up, and that's why your taxes are going to be hard to fight with the Central Appraisal District, because the prices are continuing to rise. Now, what else is going on? Unemployment. Well, it's still strong. We're sitting right around 4.5% to 5% in unemployment. So that means that our employment is at 95 to 96%. Those are great numbers here in El Paso. The median housing prices is right now at about $240,000. That's all homes. That's new and resale. That means half of them are above $240,000, half of them are below $240,000. And the housing inventory is saying that we're right at about 2 months of inventory. This comes from the Texas A&M Real Estate Center, and these are courtesy to my friend over at UTEP, Dr. Tom Fullerton. Now, current mortgage rates, what are we doing? Interest rates are continuing to rise a little bit. 30-year average is at 5.898. This is according to Zillow. That's on a 30-year conventional. Your deal is going to be back down here at a 15-year at 4.92, or a 10-year. I don't know if it's worth doing a 10-year, but a 15, you can get below 5. So 3 key takeaways that we've got on this month's report. Number 1, market still appears to be normalizing. I'm going to call that another month just because of the fact that I'm seeing what's happening out there in the marketplace. It's taking a little bit longer to get homes sold. To me, the prices are starting to level off just a little bit compared to last month. Year over year, yes, they're still increasing, but I think we're starting to normalize. Number 2, they're starting to level off on the high end, but still increasing on the low end. That's because of the lack of inventory that we've got out there. And number 3, interest rates are continuing to rise. The Fed's talking about doing anywhere from a 0.5 point to a 3/4 point here in the month of September. We'll see what happens once they meet and look at the inflation charts, because that's what they're trying to tie it to say, hey, if inflation is still going up, we need to increase the interest rates to stop the inflation so that we can get their prices normalized. And that's going to affect you in the real estate market on the long term. So that's our report for this month. If you've got questions about this report and how it affects you, please give me a call. 915-588-1850 is my cell number, or hit me online, patrick.tuttle@coldwellbanker.com, and I'll be happy to answer any questions that you have about the real estate market here in El Paso. Thanks for watching. God bless you, and make it a great day. Bye-bye.